Hi, Assalamualaikum. My name is Nur Maizura binti Mahadi alias Hamidi with my matrix number 2022422092.
My name is Putri Nulaili Aidura binti Asra Khairil. My matric number is 2022611984.
Assalamualaikum warahmatullahi wabarakatuh. My name is Halima binti Muhammad Ayo. I am from MBM 2E and my matric number is 2022241346.
Assalamualaikum, my name is Filiza Iziana. My matric number is 20222
Hi, Assalamualaikum. My name is Nur Shaira Umairah binti Abdul Malik. My matrix number is 2022283814.
Hi, Assalamualaikum. I am Halima. We are from Group 3. Today, we will be present about analysis of corporate financial performance. A trend and cooperative study of company SHH Resources Sdn Berhad and Fiamma Holding Sdn Berhad. So the subtopic of the analysis is such as liquidity ratios, leverage ratios, efficiency ratios, profitability ratios, valuation and growth ratios. Okay, so sir, please enjoy our presentation. Thank you.
Hi everyone, my name is Maizura. So I will begin with liquidity ratio. So liquidity ratio is defined as a type of financial ratio used to determine a company's ability to pay its short-term debt obligations. So now, let me explain briefly about current ratio. So current ratio is used to measure the ability of a company to cover its short-term obligation with its current asset within 1 year. The greater the ratio, the better the liquidity condition of the company. Okay, so how do we calculate current ratio? So current ratio can be calculated by dividing current assets with current liabilities. The numbers on the slide is actually the current ratio recorded for SHH Resources Berhad and Fiamma Holding Berhad from year 2018 to year 2022. So from the bar graph, we can see clearly the difference of current ratio between SHH Resources Berhad and Fiamma Holdings Berhad. We can see that both organizations' current ratios have decreased in 2019 but have climbed up from 2020 to 2022. SHH Resources Berhad has a higher current ratio compared to Fiamma Holdings Berhad. So moving on, I will explain about quick ratio. So quick ratio measures the ability of the business to pay its short-term liabilities by having assets that are readily convertible into cash. So how can we calculate quick ratio? Quick ratio can be calculated by deducting current asset with inventory first and dividing it with current liability. The numbers on the table in the slide is the quick ratio calculated for SHH Resources Berhad and Fiamma Holdings Berhad from year 2018 to year 2022. Let us moving on to the bar graph to see it more clearly. So from the quick ratio graph, we can see that Fiamma Holdings Berhad is in a better position to fulfill its current obligations immediately than SHH Resources Berhad. For comparison between these two companies, we can see that Fiamma Holdings Berhad had a faster ratio than SHH Resources Berhad. So the quick ratio for SHH Resources Berhad on 2019 was only 0.62, which is the lowest compared to other 4 years. While Fiamma Holdings Berhad slightly dropped from 1.96 on 2018 to 0.85 on 2019, but they keep increasing for another 3 years, that is on 2020 until 2022. Now I will explain about net working capital. So net working capital measures a company's short-term financial health. Net working capital shows the difference between a company's current assets and current liabilities, and the remaining ringgit amount is the company's working capital for immediate future. So this table shows the net working capital for both companies from SHH Resources Berhad and Fiamma Holdings Berhad from year 2018 to 2022. So the ringgit stated is the net working capital for both companies. So from the bar graph, we can see that the trend study of net working capital for SHH Resources shows a decline in 2019, but it increased from 2019 to 2022. They reduced networking in 2019 and raised again in 2020 onwards. Meanwhile, Fiamma Holdings Berhad net working capital shows that their current obligations are not more than their assets. So this is beneficial for the firm since positive net working capital may be invested in the company's future growth.
On this part, I'm going to present about the leverage ratio. Leverage ratio can be divided by two categories, which is debt ratio and debt equity ratio. Now let's take a look about leverage ratio. Leverage ratio is a ratio any one of several financial measurements that look at how much capital comes in the form of debt or assesses the ability of a company to meet its financial obligation. The leverage ratio category is important because company relies on a mixture of equity and debt to finance their operation, and knowing the amounts of debt held by a company useful in evaluating whether it can pay off its debts as they come due. Now, let's go with the first category, which is debt ratio. Debt ratio can be defined as the percentage of a company assets that are funded by debt. Formula for debt ratio is total liability divided by total asset times by 100%. For SHH Resources Berhad, their debt ratio from 2018 to 2022 is from 0.22%, 0.27%, 0.32%, 0.30% to 0.28%. While for Fiamma Holding Berhad, their debt ratio from 2018 to 2022 is 0.37%, 0.36%, 0.27% to 0.26%. Now let's take a look at differentiates of debt ratio between SHH Resources Berhad and Fiamma Holding Berhad. For the light orange bar graph refer to SHH Resources Berhad, while for the dark orange one refer to Fiamma Holding Berhad. As we can see here, Fiamma Holding Berhad have a higher ratio and stable between 0.37% to 0.36% on 2018 to 2019, and they remain constant on 2020, but it slightly falls on 2021 to 2022, which is from 0.27% to 0.26%. Next, for SHH Resources, reflected in between 0.22% to 0.28%. As we can see from the bar graph, SHH Resources Berhad a bit increased to 0.27% on 2019 to 0.32% on 2022. They have a lower ratio compared to the Fiamma Holding Berhad. In conclusion, Fiamma Holding Berhad is better at handling their debt ratio than SHH Resources Berhad, despite the fact that both companies have a respectable ratio that is less than 100%. A ratio below 100% shows that a great portion of a company's asset is funded by equity. Next one, I will explain about debt equity ratio. Debt equity ratio refers to measure of a degree to which a company is financing its operation through debt versus wholly owned funds. Formula for this particular one is total liability divided by total equity and times by 100%. For SHH Resources Berhad, all their ratio is higher in 2018 to 2020, which is from 0.29% to 0.47%, and take a huge fall on 2021 to 2022, which is from 0.42% to 0.39%. While for Fiamma Holding Berhad, their ratio is fluctuate in between 2018 to 2022. As we can see here, debt equity ratio for Fiamma Holding Berhad on 2018 is 0.60% and dropped to 0.57% on 2019. Then on 2022, the ratio remained constant but continued to fall on 2021 to 2022, which is from 0.38% to 0.35%. So in conclusion for this debt ratio equity, both of the company have debt equity ratio which below than 100%. Lower debt ratio shows a financial stable business. Higher debt to equity ratio are considered as a risky company to invest the creditors and investors.
Entry number is 20222669664. Today I would like to talk about asset management. Asset management ratio are a group of metrics that show how a company has used or managed its asset in generating revenue. Through this ratio, the company stakeholder can determine the efficiency and effectiveness of the company asset management. Due to this, they are also called turnover or efficiency ratio. As the name suggests, the ratio usually consider only two factors. The first factor is company asset and the second factor is revenue. Furthermore, this ratio allows stakeholders to analyze the financial performance of company from multiple aspects. Usually, stakeholders prefer companies with the higher profit. Talk about DSO, the sales outstanding. It is a measure of average number of days that it takes of a company to collect payment after sales has been made. This is often computed on monthly, quarterly, or yearly basis by dividing amount of account receivable during a given period by the total value of credit sales during the same period and multiplying the result by the number of days in the period measure. For this formula is account receivable divided by total credit sales multiplied by number of days. From a cash flow perspective, we would like DSO to be as low as possible. It is important to understand that if DSO goes up, then the cash flow will goes down. The reverse is also true. If DSO goes down, the cash flow will goes up. Why DSO is important? It is because the payment from customer is key driven in cash from operating activities. The incoming cash from customer paying on time in full is important for a company as it is a human being to have oxygen to breathe. Inventory turnover. Inventory turnover is a ratio that shows how many times a corporation sell replace inventory in specific time. Calculating inventory turnover can help business make a better decision on pricing, manufacturing, marketing, and purchasing new inventory. And then for this inventory turnover, the formula is sales divided by average inventory. So the higher ratio means the better performance and efficiency, but the lower ratio means inefficiency, overstocking, or even observant of the stock, and there could be higher inventory holding costs. So for SHH and Fiamma, for SHH on 2020, the higher ratio is on 2020 4.60, and then for Fiamma Holdings Berhad is on 2018 2.43.
Today I will present about profitability ratios for a company SHH Resources in Berhad and Fiamma Holdings in Berhad. Okay, what is profitability ratios? Profitability ratios are a type of a financial indicator that is used to evaluate a company's capacity to create earnings compared to its sales, operational costs, balance sheet assets, or shareholders' equity over time. Utilizing data from a single point in time, they are among the most widely used measures in financial research. Okay, profitability ratios can provide insight into a company's financial performance and health. Profitability ratios can reveal how successfully a company's management manage its operation. Profitability ratios for a company are most beneficial when compared to those similar company, the company's own performance history, or industry average ratios. Now we move to net profit margin. Okay, what's a profit margin? Profit margin are used to measure a company's profitability at the various cost level, including a gross margin, operating margin, pre-tax margin, and net profit margin. The net profit margin is the company's ability to generate earnings after all the expenses and taxes. So the formula to get the net profit margin is net profit after tax divided by average inventory. So the below is the table of the net profit margin between SHH Resources India Berhad and Fiamma Holdings Berhad from 2018 until 2022. Okay, as you can see, here is the graph chart analysis for net profit margin. Okay, as you can see, SHH Resources India Berhad show that the total margin is the same in 2018 and 2019 and experienced a big decrease in 2020. That is the margin decrease from 0.9 to 0.03 in 2020. But for another 2 years, the net profit margin increased by 0.01 only every year from 2021 to 2022. But I think that's good because there is like increase for the company's margin. So Fiamma next profit margin decreased slightly from 0.11 in 2018 to 0.09 in 2019 and continue to increase over the next 3 years. We can say that both companies actually show low margin because both companies do not reach 5% of the net profit margin. Both need to be good at turning their sales into profits. Now we move return on assets, or we call it ROA. Okay, ROA is the net income divided by total assets. The more assets a company has amassed, the more sales and potential profits the company may generate. As economies of scale help lower costs and improve margins, returns may grow at a faster rate than assets, ultimately increasing ROA as on the table show. So the formula for ROA is the net profit after tax divided by total average multiplied 100%. So as you can see, there is table ROA here, right here, from 2018 to until 2020 for both companies. The graph chart analysis. Okay, as you can see, SHH Resources India Berhad decreased from 2018 to 2020, which is 0.11 on 2018, 0.10 on 2019, and 0.03% on 2020, and then slowly increase from 0.04 on 2021 to 0.05 on 2022, while Fiamma Holdings Berhad shows decrease on 2019, and the ROA stay in the same line from 2020 till 2022. So we can see that both of the companies have their ups and downs. Now we move to ROE, return on equity. ROE is a key ratio for shareholders as it measures a company's ability to earn a return on its equity investment. ROE is net income divided by shareholders' equity. So the formula of ROE is net profit divided by total equity multiplied by 100%. As you can see, there is table of ROE for two companies from 2018 until 2022 for 5 years. Okay, now we move to the graph chart analysis for ROE. Okay, as you can see, SHH Resources Berhad had a return on the same amount of equity and started to increase rapidly from 0.40% to 0.80%. A high ROE suggests that the company management team is more efficient when using investment to grow their business and provide better return to investors. So for the Fiamma Holdings Berhad had a big fall on 2018, that is the drop from 0.73% to 0.06% in 2019 and slightly increased in 2020, and the ROE is static in the next 2 years. So what can I say is ROE, I can tell is what ROE is a measure of efficiency. When it increases, it indicates that the firm is expanding its profit generation while using a less capital. It also reveals the extent to which company management spends shareholder cash. A low ROE means the company may be mismanaging and should reinvest earning into unproductive assets.
Hi, I'm Shaira. I will explain about valuation and growth ratio. Valuation ratio, sometimes called market value ratio, are measurement of how appropriately share in a company are valued and what type of return an investor may get. By calculating the market value, a potential investor can see if the share are overvalued, undervalued, or at a fair price. It also helps determine how much a potential investor should buy. There are several different valuation ratio calculations that can be done to find the market value of a company or stock. Understanding how each ratio works can give you a better evaluation of a company financial health. So, we are going to explain about earnings per share. Earning per share, which is EPS, is calculated as the income of goods detached for one shares of the ordinary shares that are superior. The larger the EPS of a party, the more productive is it just expected. Formula for earning per share: net profit minus preferred dividends divide average common share outstanding times with 100%. So, as we can see the diagram, earning per share by year within 5 years from 2018 until 2022. So, with SHS Resources Berhad, we can see that in 2018 negative 19.10, 2019 15.97, 2020 negative 5.35, and 2021 and 2022 increase, which is 3.97 and 5.15. Fiamma Holdings from 2018 until 2022 positive. So starting from 2018 6.46, 2019 5.63, 2020 7.20, 2021 7.03, and last year for Fiamma Holdings 2022 7.36. And now we can see the graph earning per share. Fiamma Holdings Berhad decreased in earning per share, but in 2020 the graph showed that earning per share increased until 2022. We can see clearly on the graph that Fiamma Holding Berhad have a better net profit for 5 years. SHS Resources Berhad made loss throughout 2018 until 2020 and made the earning per share negative. So for the value of earning per share for SHS Resources Berhad negative, but SHS Resources had go through 3 years successfully. As we can see the graph, their earning per share increased year by year. Higher earnings per share attract more investors to a firm that can build more profit. The next slide is price earning ratio. Price earning ratio are used to determine the relative worth a company's stock in analysis for investor and analysts. It may also be used to compare a business or to compare composite markets with each other or over times against its own historical records. So for formula price earning ratio, market price per share divide earning per share. So now we can see the diagram for 5 years from 2018 until 2022 with 2 companies, which is SHS Resources Berhad and Fiamma Holding Berhad. So after calculate price earning ratio for 2 companies, which is SHS Resources Berhad and Fiamma Holding Berhad, we can see that 2018 from company SH Resources, we get negative, which is 0.42. For the next year, negative 0.51, 2020 0.48, and increase on 2021 and 2022, 0.88 and 1.08. So for Fiamma Holding Berhad, year by year increase from 2018 0.91, 1.04, 0.84, 1.01, and the last year for 2022 1.50. So here the price earning ratio graph. Price earning ratio for SH Resources Berhad were negative due to earnings per share on the 2018 to 2020 also negative, but on 2021 price earning ratio for SH Resources Berhad increased to 0.88 and 1.08 on 2022. Price earning ratio for Fiamma Holding Berhad increased from 0.91 on 2018 to 1.04 on 2019. On the 2020 price earning ratio for Fiamma Holding Berhad slightly decreased to 0.84 but rapidly increased on 2021 and 2022. Earnings per share effective to price earning ratio value also the market price per share of the company high. If we compare both of the companies, we can see that Fiamma Holding Berhad is better than SH Resources Berhad.
So for the conclusion is I can say is Fiamma Holdings Berhad has a greater liquidity, operational efficiency, and short-term help rather than SH Resources Berhad. Fiamma Holdings Berhad outperform SH Resources Berhad in all criteria above, although having a certain weaknesses. That's all. Thank you.